SMT divergence. You've heard it talked about before. You don't know what it means. You don't know when to use it. You don't know how to identify it. I am going to clarify everything and every question you've ever had about SMT divergence before. I've made a beautiful little Miro document. I know it looks great. I did this specifically because too many people ask me too many times a day what SMT divergence is. Too many traders online don't know how to clarify what it is and articulate exactly how to use it when you find it. And I'm going to do that today, so you never have to watch another video. I guarantee this will be the only video you need, and you'll have no questions at the end. We have tons of examples to go through. I have tons of definitions to show you. And the first thing I want to start with is smart money trading divergence. Some people call it smart money tool divergence. I don't care what you call it. I'm going to examine today the exact relationship between correlated assets and sometimes inversely correlated assets. As soon as we know that something's correlated and we find a divergent, so as soon as it's not correlated anymore, that's your opportunity. Simple. I don't know why people couldn't just explain it like that in the first place to me. A few things to note, and I don't get why most traders online or influencers don't talk about this, because it's extremely important and helps clarify that SMT divergence is not a trading model whatsoever. It is a confluence. It is something you use in conjunction with your trading model. SMT by itself is not a trading model. More people need to say this. I don't know why they don't. Some people think that all you need to do is use SMT and you can make money. This is completely false and sets incorrect expectations. Also, SMT is only used for reversals. That's it. Don't look for continuation. It is only for reversals. These are some things that people need to say online when they're trying to teach these things. They're the first foundational points for SMT reversals, okay? SMT also only has value at certain points. You can find SMT on the 1 minute. You can find SMT on the 5 or the 15 minute. You can find it on the daily. But if it is not at a point of value, then why would you expect the SMT to have value? And those values are defined by fair value gaps, order blocks, or points of liquidity, time-based session liquidity, equal lows, equal highs. You get the idea. If you still have a question about what liquidity is, I think you should watch some of my other videos that describes what liquidity is and how to use it properly. This will help you use SMT divergence more properly in your trading. SMT is important because it identifies false breakouts. Hallelujah, right? I'm going to help you use something in your trading toolbox that is going to help you identify when something probably isn't going to break out and most likely will reverse, as we know is typically called a sweep, right? A sweep reverses, a displacement continues. Now, the cool thing about SMT is it only works on certain things. Like SMT isn't going to work on XRP and Polkadot, which are two cryptos. XRP is not going to work on Apple and Home Depot stock. SMT only works on certain things, and these are the things it works on, right? NQ, ES, YM. Yes, the three major indexes. Most of the time, ES is our leader, and it will relate to NQ, and ES will also relate to YM. Typically, YM and NQ don't correlate to them two. ES is typically the big leader, right? The S&P 500. And then NQ is the NASDAQ, YM is the Dow Jones, okay? So ES to NQ, ES to YM, but not NQ to YM, okay? We get it now? Forex. So I don't typically trade Forex, but I do have to tell you that there are assets that correlate. EU to GU. And then these are also inversely correlated to the dollar index. So EU USD inversely correlated to the dollar index, of course. GU USD inversely correlated dollar. Most of this won't matter. I am not a Forex trader. I don't teach Forex trading. I don't encourage Forex trading, but I do need to let you know that if you are a Forex trader, this can be used in your market as well. Crypto. This is the only two pairs. I'm really simplifying the amount of pairs you have to trade, which is great because that's another point of trading. Less pairs, more profit. Bitcoin and ETH are the only two positively correlated pairs I would use with this confluence, okay? So let's get started. SMT divergence by definition, right? Smart money tool. Some people call it smart money trading. Who cares what the acronym is? Let's learn what we need to know, which is separating in similarity. That is the divergence. The big part of this is the divergence. Who cares about the SMT part? It doesn't matter. Is the fact that we are finding something that is separating in its continuous similarity and is now changing, right? By definition, I'll quickly show you this, right? We can see that there's some assets that are very correlated. We can see that this is the S&P 500 and the NASDAQ. When the ES takes its lows, typically, so does the S&P 500. The highs, the highs, the lows, the highs, the highs, the lows, they typically always move in tandem and take out the same levels. The whole basis to SMT divergence is to find when they are now not correlated. That means we have opportunity. All you're looking for in trading is to find opportunity and make more money. That's what I'm here to do today. Just help you make more money. I'm not here to clarify any hidden wisdom that you didn't have before. All I want to do is give you something that will potentially help you make more money. That's why you're here. Don't kid yourself. So let's start defining. Divergence, specifically in SMT, is a concept used in trading to identify a potential trade opportunity by examining the relationship between closely correlated or inversely correlated assets. This idea is to look at how closely correlated markets or inversely correlated markets move in relation, okay? And of course, the inverse markets are bond yields. We also have the DXY with the Euro and the GBP. And then we also have closely correlated, which could be Euro, USD, DXY, NASDAQ, ES, ESY, and you get the idea. I just went through them earlier. When these markets do not move in sync as expected, it creates a divergence, which this is opportunity. Divergence is your opportunity, and that's the key idea in this entire video. This divergence can signal that smart money is entering or exiting positions, which can be a precursor to a significant price movement. So the reason we want to define and figure out where SMT lives is because it can signify a potential massive move, which means potentially more money. What's SMT divergence? This is what you're going to learn today. In the index, context, confirmations, limitations. I'm going to give you a cheat sheet for all of these as well. Moving on. How to use SMT divergence? Well, frankly, in any confluence you use, context matters. SMT divergence should be used in conjunction with other trading criteria, such as my ILM model or my orb model. Such key times are London, New York open, right? London lows, highs, Asia high lows, New York high lows, time-based session liquidity, or specific price levels like order blocks or liquidity pools. Like I referenced earlier, this is when it becomes important and you find your value points, right? You got those exact levels. So let's go into a little chart example, right? We're going to have asset 1, which is our strong asset, right? And the strong asset is defined by the fact that you can see that it is printing a higher low. So this low did not break. Fantastic. The low didn't break, but on asset 2, which is also another closely correlated asset, it did break. So this asset, the low broke, this asset it didn't. And these typically move in tandem with each other. This signifies that potentially this correlated pair, not printing a lower low, may have a strong move to the upside, presenting an opportunity in asset 2. This is it. This is the smart trading reversal. These two assets that typically always move the same, like I just showed you, NQ and ES, they typically always move the same. As soon as they don't, there's an opportunity. If you have a strong asset, which is, by the way, defined by it not breaking its low, of course, it's strong. It's printing a higher low, which by definition is a stronger asset than one that is printing a lower low. This is where you'd find the reversal opportunity. So after reaching a strong point of liquidity like a fair value gap, a bullish SMT forms between two closely correlated assets, anticipating a possible market move here. All of this was happening at a high time frame fair value gap. Remember, we can find SMT at every second if we truly wanted to. It doesn't mean all of them are valuable to you. Okay, moving on to confirmations, right? Use SMT divergence alongside other indicators or setups to confirm your trade idea. That's what we're looking for here. You can't make money with SMT divergence alone, but if you add something to it, that can also help you understand oversold conditions. Maybe it's an RSI. I don't personally trade RSIs. I don't trade stochastics, but I'm showing you because this is the most retail concept imaginable, which is the RSI. You need something in conjunction, right? Whether it's my ILM model, the ORB model, or if it's as minute and basic as an RSI, you need something. I don't care what you use as long as you're profitable with it and you have data to support this thesis. The SMT needs to be used alongside something. SMT alone is no bueno. It won't work. SMT in conjunction absolutely can. Does it have to be the RSI? Absolutely not. And I also don't suggest it. That's why I'm making this note right here. Now, you may be thinking, well, this is amazing. I can find two closely correlated assets If they diverge in their typical qualities of each other, there's an opportunity. Correct. Now, it's also not magic, right? SMT divergent alone does not guarantee any successful trade or profit to be made, but it could be a part of your broader trading strategy. So if you already have one, I do encourage you to continue watching this video and end up adding it later, maybe tomorrow or the next day when the session opens, and just look for it. Just look for it and tell me it doesn't make sense when it populates for you to understand. I mean, I already have reversal models myself. Adding SMT just helps to confirm them a little bit more, and that's what this video is trying to at least help you get to make more money, to confirm false breakouts so you don't lose money, right? Proper context aligned with the SMT ensures that the divergence is occurring at a significant market level, and this is to help avoid against false signals. Now, let's get into some cheat sheets here. So we have a crypto cheat sheet, right? If we have BTC, which is at the time currently weaker, it's weaker, and this is defined by the fact that it can't break its high, and ETH can, there's an opportunity that ETH is going to be a false breakout, right? This is showing the relative weakness paired with bearish structure, which would mean a good short opportunity. If we see the divergence up from Bitcoin with some strong breaks of highs and bullish structure, we know that because Bitcoin can't break its high, and these are correlated assets, the opportunity here is a reversal, not a continuation, right? So the reversal opportunity would be best here on Ethereum, in addition to maybe your ILM model, which would give you a auction failure, and then you could wait for the auction failure and then short to the lows, right? I have plenty of examples on the chart to show you here. Here is a example of Bitcoin being stronger, right? In this case, Bitcoin's stronger. Why would Bitcoin be stronger? Well, it's printing higher lows by definition. We have price moving up, printing higher lows, breaking the highs, and continuing, right? All the highs continue to break, and the lows stay intact. This is showing that the buyers are in control, which means it is currently stronger. This is diverging from ETH because ETH actually took its low. So ETH is completely different right now. This gives you the opportunity. If ETH breaks its low and BTC does not, what would you want to do? I'll give you about 3 seconds to think about this. Well, the idea would be that if you have a cracking correlation with BTC, focus on the stronger pair for longs, which would be BTC, and the weaker pair for shorts. Now, this opportunity, right? Of course, you'd want to look for shorts here, but what I really want you to think about is if ETH can't break its low, right? Or if ETH is breaking its low, but Bitcoin's not, is there a potential for there to be a reversal setup on ETH? Absolutely. Now, of course, we always want to focus on the stronger pairs. So if Bitcoin's currently stronger, we obviously have a heavy weight on this to move a little bit further in the session. So let's keep that in mind. Now, we have a few forex pairs to go through. I'm only going to do one, right? The GBP, USD, and then DXY. Inversely correlated, of course, the DXY opposite to the pound and the dollar. Of course, if this is failing to break highs and this is breaking lows, we know there's a cracking correlation here. Same thing on the stronger side with the pound and the dollar. If we have the pound successfully holding its lows, which means it's currently bullish, and the DXY taking its highs, obviously, if a new high on GBP is formed, we have a higher low indicating strength in this asset. So we know where the strength is in that asset. And we have a few more to go through. I'll leave them on the screen if you trade Forex and you want to take a screenshot. I won't go through them for the sake of time. I want this to be a quick video, and I don't trade Forex much, and I don't think much of my audience trades Forex either, which leads me to believe a lot of you wouldn't want to trade this. So let's get into indices because this is where a lot of you are futures, right? Futures traders. If we have NASDAQ, which is weaker, it's failing to break its highs, but ES is breaking its highs. We have an idea here for a reversal, right? Diverging down from ES is a strong cracking correlation, meaning a good short opportunity is coming, right? Now, the relative strength is an ES, of course. So if we have ES moving up above its high, so it's breaking its high, NQ fails to break its high, what do we think will happen? Potentially a good short opportunity. Again, it doesn't mean a short will happen. It doesn't mean that price is going to diverge immediately, but use it in confluence with other things. Now, I know I'm saying this a lot through this video, but a lot of other influencers online don't say this, completely hurting a lot of people who are expecting SMT to work every time. And if they use SMT a few times and it doesn't work, they're going to get upset by it. They're going, hate the trader who's teaching it because they didn't teach it properly, and they're going to hate trading, get a sour taste in the mouth. So I'm here to show you the realistic opportunities you can have using this, right? So if NQ is stronger, so NQ is not breaking the lows and ES is breaking the lows, we have a divergence. Typically, these move very closely, as I showed you before. They move very closely together. In this case, if they're diverging like this, I'm going to show you an example, right? We have NQ that fails to break its lows right here. So let's look at this. NQ fails to break lows here, but ES does break its lows. What do you think can potentially happen? Well, we know for one that NQ is stronger, and this is the weaker asset as it's breaking its lows. There is a high chance that this will reverse, and there's a high chance that ES will give you a massive reversal. Now again, let's look one more time. NQ fails to break the highs. ES does break the highs. What do you think happens? Of course, you can already see it because the chart has already played out here. But again, this shows you the potential short opportunity that you can have on ES and that continuation short reversal on NQ. So keep that in mind. It is probably one of the most important things you need to know, and you can also use it on Bitcoin and ETH. And here's a quick example, right? As we can see right here on BTC ETH, a fantastic period where there is a divergence. Ethereum, this high is taken by this price over here. Now, Bitcoin, the same high, right? It is the same exact high, fails to take it. What is this telling us? Well, the stronger asset, of course, being, in this case, ETH, is telling us that, hey, the leader, BTC, probably isn't going to continue with us. So this is a false breakout, right? This is a false breakout to the highs because Bitcoin's not doing the same thing. And we can see the asset then begins to recorrelate significantly soon after. You can see the highs get hit again, and this is typically what you see. You typically see this, which is correlation, the same thing all the time. NQ and ES take the same highs and lows all the time, but when they don't is when there's opportunity. And I hope you learned a little bit more about SMT divergence today and how it's used. Remember, this is not a model, it's a confluence. We only use it for reversals, and it must be at a point of value, and this is going to help you identify false breakouts, which inevitably equals potential short or long opportunities, such in this example I showed you with NASDAQ and ES. I do encourage you to continue in the market tomorrow or whenever the session opens for you next and just look for SMT. Don't even trade it. Just say, hey, NQ and ES are doing something that they typically don't do. What is going to happen after this? And then just observe and watch over 10, 15, 30 times what continually happens. What is the majority of the time showing you what happens? And then come back again, rewatch this video, and it will all make sense. Thank you guys for watching this video. I want to do a quick humble brag. I'm filming this video on April 30th, which is the last day of April, and I want to go over my quick profit margins. I'm ending April with a 33.5% return on a 55% win rate. Every trade you see in here over the past 9 months, I've taken 138 trades. I do live with my Discord. You guys can join me for free on Tuesdays and Sundays if you'd like to check it out. If not, first link in the comments is going to be how to join me for live stream every day. Watch me use SMT in action. Watch me use my models, my ILM. This is the trade I took today. I'm filming this on April 30th. This is my April 30th trade. Longs from the lows. Everybody was scared. I saw some really popular influencers online shorting all the way down here. I took the opposite trade. I explained it in real time. I hope some of you guys take some time to watch me on Tuesday or Sunday. You can learn something from it. Of course, those sessions are free. Please enjoy them. They'll be there forever. And if you enjoyed this video, drop a like, subscribe, comment. It literally encourages me to make more videos demystifying some of these concepts that a lot of these traders continue to attempt to decode to make themselves feel smarter. It's not complicated. Just find correlated assets. Understand that when they stop being correlated, that's divergence. That's something you can now take from it. There's action. That's action, right? That's it. So hopefully I've demystified SMT divergence, helped you understand how to use it. You have a whole bunch of cheat sheets that you can use to understand when to use it, how to use it. Hopefully my examples also helped you. I will see you guys in the next video. Goodbye.
Maybe I'm rich, maybe I'm wrecked, maybe I'm cursed, nah, maybe I'm blessed. Maybe I'm ghosted, maybe I'll get a text. Maybe I'm in last place, but maybe I'm next. Maybe I'm on top, maybe I'm at the bottom. Maybe I missed out, maybe I got him. Maybe I had no attempts, and maybe I shot him. Maybe I'm the man, but maybe I'm not him.